In this video, we look at the recent volatility in the gold price. Canadian Mining Report is not a financial advisor. This video is for informational purposes only and does not constitute investment advice. The gold price had been high and reasonably stable from June 2023 to early September 2023, moving about $40 around an average $1,937 per ounce over the period. But recently, considerable volatility has erupted in the price, which suddenly plunged at the end of September and into early October by over $100, before then recovering almost this entire amount. The main driver of the plunge in gold seems to have been fundamental factors that would typically have pushed the price down, but which markets had held off on pricing in on continued hopes for a more dovish Fed. However, when the Fed remained hawkish at their most recent meeting, the market seems to have finally capitulated. One of these factors was rising real bond yields, which makes the opportunity cost of holding yieldless gold higher and tends to drive outflows from the comparably much smaller gold market into bonds. While nominal yields had gradually been rising through 2022, this had been offset by US CPI inflation, which had been extremely high through last year, peaking at 8.9% in June 2022, with real yields calculated as nominal yields minus inflation. The high inflation drove increasingly negative real yields in early 2022, hitting a low of negative 6.4%, with a nominal 2.1% yield and 8.5% inflation rate. But as inflation started to decline from July 2022 and as yields rose, real yields got progressively less negative and actually turned positive in June 2023, making alternative safe haven investments to gold like bonds look far more attractive, potentially pressuring the gold price. Another key factor driving the decline was a resurgence in the US dollar index, which tends to drive down gold as the two generally move inversely. While in 2022, the US dollar had surged as US interest rates were increased much more quickly than other countries, drawing in fund flows and pushing up the currency, over the first half of 2023, many other countries were catching up with major rate hikes of their own, drawing funds away from the US dollar. However, in the past 3 months, the US has surged again as the Fed continues to remain quite hawkish, with high rates expected to be maintained. A third broader macro factor has been a decrease in the money supply, with the value of the gold stock tending to rise as the money supply increases and vice versa. The US M3 money supply soared through 2020 and 2021 as global central banks added liquidity after the global health crisis. However, it peaked at $21.7 trillion US dollars in mid-2022 and declined by $1 trillion to $20.7 trillion at its lows in April 2023 and has rebounded slightly to $20.9 trillion since. The growth rate in the money supply year on year was 25.7% in February 2021, but had dropped by half to 12.7% as of September 2021, and dropped by half again to 6% in May 2022. And from December 2022, it turned negative and has declined by 3.6 to 3.8% for the past 4 months. This is extremely low historically, with the average growth in the US M3 money supply since the 1960s usually ranging between 3% to 10%, which shows just how extreme both the 19.1% growth peak in 2020 and the current growth of below negative 3% are. While a combination of these fundamental factors drove the major decline in gold, its rebound has really been driven by a single issue: the huge jump in geopolitical tensions over the past 2 weeks centered on the conflict in the Middle East. Since 2020, all the major jumps in gold well above the $1,842 US dollar per ounce average from October 2019 to October 2023, and where gold has reached $1,950 US dollars or above, have been driven by major crises, including the health crisis in mid-2020, the Russian invasion in early 2022, and the banking crisis in early 2023. The periods where gold dropped well below this average have generally been where there either was an actual economic rebound ongoing, as in mid-2021, or there were expectations of one, as in mid-2022. For now, the downside from the fundamental factors and the upward driver of geopolitical risk appear balanced, with the gold price at $1,863 US dollars per ounce, reverting to near the 4-year average. For more on gold, other metals, and junior mining stocks, click the link in the description or bio below to go to www.canadianminingreport.com.